السلام عليكم ورحمة الله وبركاته. الحمد لله رب العالمين والصلاة والسلام على محمد سيد المرسلين وعلى آله أجمعين. So today's session is about preparation for IOFI Certified Shari'ah Advisor and Auditor program. Brother Ahsan, please confirm if my slides are visible.
Yes, Sheikh, your slides are visible.
Okay, Jazakallah khair. So in this session, what we are going to do is a very brief overview of the Shari'ah standards and governance standards that are going to be covered on the CSAA exam. I know like all of the candidates who are joining with us, the exam is right at the door and you have already prepared very well, hopefully, inshallah. And inshallah, the exam will also go very well. But it's just like a very quick refresher that TAIF has been organizing for the last few CSAA programs, and we have received a lot of good feedbacks, alhamdulillah. In fact, we understood that many of the attendees also have been watching the previous recorded videos. So inshallah, if you have any particular question regarding any particular clause, you can ask, you can put that clause referring the Shari'ah standard and the clause number with the full clause in the comment section. So I can inshallah look into it when I'm going to answer the questions. Other than that, I will be proceeding with, as I mentioned, very brief overview of the Shari'ah standards and governance standards. So just a quick recap. Until now, the exam curriculum of CSAA this is how it looks like. There are 48 Shari'ah standards, number 1 to 48. As we know, the Shari'ah standards now are exceeding 60. I think the last one most probably is 61, if I'm not mistaken. However, the exam curriculum is still until 1 to 48. And in terms of governance standards, there are more than 10. But just the first 4 governance standards are part of this curriculum. So this will be discontinued after, until now, as of shared by IOFI, it should be discontinued after the December 2022 exam. So beginning 2023, the new curriculum will apply, which will have 4 modules instead of this one exam. So each of those modules needs to be given exam separately, just like SIPA. All right. So let's proceed without further delay, because we have around 48 plus 4, 52 standards. And as I mentioned, we are going to be very brief, and we have put only one slide for each Shari'ah standard, each standard. So that we have a very quick overview. I think sometimes maybe even less than a slide. All right, so the first Shari'ah standard, as we know, it's about trading in currencies, right? So what are the major issues in trading in currencies? So if you look at this hadith, a very popular hadith narrated by Abu Sa'id al-Khudri radiyallahu anh, whereby he mentions that Rasulullah sallallahu alaihi wasallam said that don't sell dhahab bi dhahab, gold for gold, illa mithlan bi mithlin, except when it is in equal weight or equal amount. ولا تشف بعضها على بعض ولا تبيع الورق بالورق إلا بمثل. Similarly for silver. ولا تبيع منها غائبا بناجز, and don't sell it deferred. And there is another hadith also, which we know mainly for riba al-fadl, where the Prophet sallallahu alaihi wasallam mentions 6 items, ribawi items. So all of those needs to be, when those are exchanged with each other, needs to be in similar weight and amount, and also on its spot. However, when it is not of similar group of the commodities, then it can be exchanged on a different value, but it still needs to be on spot. So anyway, based on those traditions, the ruling is that when we are selling currencies, if the currency is of same country, of same origin, like US dollar for US dollar or Saudi Riyal for Saudi Riyal, then it has to be of same value, equal value. However, spot exchange also required. But if it is not on the same currency, if it's a different types of currency, like US dollar for Saudi riyal, for example, or Malaysian ringgit for Saudi riyal, in that case, spot exchange is still required, but the value can be negotiated between the parties. That's one of the main thing under this trade standard. So if you understand and appreciate this underlying ruling, then you can get into many other things. So for example, since spot payment is required, so anything that creates a barrier for spot payment, for example, when there is a sale with option, right? So either the seller or the buyer would have an option to cancel or terminate the sale unilaterally. So that is not possible for currencies exchange, for example. Similarly, any other thing, right, which basically creates a barrier for spot exchange, you will see throughout the share standard, those are not permissible. Uh, binding bilateral promise is also not allowed. Why is that? Because when we are having a binding bilateral promise, it's almost same to contract. Of course, there are differences with the contract, but it's almost same as a contract. And if we consider this as a contract, what we find is that it's not on spot. So binding promise means both parties agree that they will exchange such currencies based on agreed upon amount on a future date. So at the point of this binding bilateral promise, they are not exchanging anything. So it's not being spot. So this is why, again, because of we are not fulfilling the condition of being spot exchange, this will not be valid. Similarly, the debt may be settled with another currency if the exchange portion is fully settled on spot and according to the market rate. So the primary ruling are those that we have already discussed. So one of the sub ruling from this primary ruling is, for example, when we are settling a debt, let's say the debt is in Malaysian ringgit, but we want to settle it in, let's say, Saudi riyal. Can we do that? The answer is yes, we can do. So, but what's happening here? We are doing two things. We are settling the debt, and we are also exchanging the currency, exchanging Malaysian ringgit for Saudi riyal. So, in terms of payment, it's fine. The debt payment, no issue. But in terms of exchange, we need to ensure that the spot exchange rate is considered, meaning that we are not pre-agreeing on the exchange rate. Rather, on that day of settlement, we are agreeing on a rate, on a spot rate, and we do the exchange, we settle the debt, and the amount that we have agreed, we fully settle it. It's not that we let's say we agree on settling a debt of 1,000 ringgit, let's say with an agreed amount of exchange rate for Saudi riyal. But what happened? We are only settling 500 ringgit, and we are saying, okay, the rest of the 500 ringgit I will settle tomorrow. So this is where the condition of being a spot exchange is also not fulfilled. So this will not be valid. So again, I mean, those are the primary conditions of trading in currencies. So you will see throughout the share standard, anything which are coming as a barrier for fulfilling those conditions will make the exchange, will make the transaction impermissible. But if it's not there, then you'll see it's always mentioned that it's permissible. So that's a very brief overview of that. Then the next share standard is about procrastination.
Sheikh,
Yes.
there is a distortion in the mic. Is a spark or current noise coming continuously?
Or is it?
Yes,
Okay, give me around a minute. Sorry for that. Let me try to fix it.
sure. Inshallah, Sheikh Yusuf will be joining us after 1 minute or two. Uh, the issue of the mic will be solved soon, inshallah.
Is it better now, Brother Ahsan? Do you still have the noise?
Sheikh, there is noise. Like when you speak, there is a spark or something is coming.
What about now?
It's better, Sheikh. I think it's clear now.
Clear now?
Yeah,
Okay,
this.
I think it was just my plug. Sorry for that. I just
I mean,
unplugged and plugged back.
I,
Alhamdulillah. Okay.
still there is, but it's not too much. It is there, but don't worry. I think
Still
we
there?
should continue with the session instead of we should utilize the time, inshallah.
Sure. How about this one? Is it better?
Sheikh, this is better. No distortion.
Okay, khalas. Then this is my Mac microphone. All right. Okay. Sorry for the disruption. So regarding this Sharia standard on procrastinating debtor, the fundamental principle here is basically this hadith, where the Rasulullah sallallahu alaihi wasallam is saying, "Matal ghani zulmun." The procrastination of ghani. Ghani is the one who can basically pay the debt. He has the money, but he's not just paying, procrastinating. So he classified this as zulm, as a form of oppression. So this is the main hadith, main principle here. And based on this, so we will see a lot of different Sharia ruling mentioned here. So we'll see that procrastinating debtor is liable for the actual cost of the debt collection. Again, this is because it's a zulm, so he should give a compensation for the zulm. And we will also see in this Sharia standard some of the forms what we can use to deter the procrastination. So one of the thing is that is being used is as charging penalties. So when there is a default, usually what traditional financial institutions do is charge a penalty on the default amount. Right? That's what conventional financial institutions do. But the thing is, when it comes to Sharia compliant transactions, once something becomes a debt, if we are agreeing or imposing a penalty or any increase on top of that, that is also considered as prohibited or riba. So we cannot charge penalty. So of course we should try every other means. For example, making the entire debt payable right now, right? So without, I mean, closing all the installment facilities, or maybe blacklisting the defaulter, the one who is just defaulting without any underlying reason, genuine reason. So we can obtain all the different types of things. However, still, if you want to impose some sort of penalties or some sort of financial compensation, so one way to do that is taking an undertaking from the defaulter, from the borrower, or from the financing recipient, that he will donate a certain amount if there is a default. So the difference between this and the penalty, of course, when we are charging penalty, we still have to give to charity because it's not compliant with Sharia. And when he's undertaking to donate, he's also giving to charity. But the difference between the two is, in case of penalty, we are agreeing on a Sharia non-compliant element, and then once it is triggering, there is a Sharia non-compliance. We are basically relieving ourselves by donating it to charity. But in case of undertaking to charity, it's a Sharia compliant thing. Of course, it's not adding to the revenue of the bank or the financial institution, but in principle, it's a Sharia compliant thing. So we are not agreeing to riba in any way. So that's the basic difference between the two, and that's what AAOIFI in this Sharia standard has also mentioned. All right, so let's go to the some of the other things. This is not a Sharia standard per se, but several other things. For example, in the in the Sharia standards on Murabaha, Salam, Istisna, even Ijara, we'll see those things are mentioned, repeated, or coming as a recurrent items. So what we did, we tried to summarize, and this is very well done in the SIPA book as well. So we tried to combine that. So when it comes to gharar, we'll see a lot of Sharia ruling in this Sharia standards based on gharar, based on the prohibition of gharar, especially when gharar becomes excessive, when we cannot control it. In general, gharar, if it is not fahish, if it is not excessive, it is minor, then it is ma'foon, meaning that it is forgiven, it's tolerated. But when it comes to excessive, this is where Sharia impermissibility or issues on the contract will come. Generally, we try to control the gharar, we try to mitigate the gharar. Gharar will be there by default, but we try to control it. So in this slide, we see some forms of gharar in the various stages or various elements of the contract. For example, in the forms of the contract, so one gharar would be like two sales in one, where we are combining two different types of sales contract into one, or making one a contract contingent on a future event. Like if that happens in the future, then only our contract will be fulfilled, for example. So this is also a gharar. It's not permissible. Contract effective on a future date, right? Except for lease. When it's a lease, then we have ijara mawsufa bi thimma, forward ijara, in other words, where we agree that, for example, that we will take this house as a rent from this next month, for example. So that's fine. But other than that, if it's a sale contract, that is not valid as well. Forward and futures. So what happens in a forward and futures? We agree for a contract to be executed in the future, right? So and both counter values are deferred. This is also prohibited under the concept of bay'ul kali bil kali. The Prophet sallallahu alaihi wasallam has prohibited bay'ul kali bil kali, where both counter values are deferred. So if you look at Salam, for example, in Murabaha, that is being highly practiced in Islamic financial institutions. So the client pays, one party has to pay the price, the other party may defer the delivery, or usually, sorry, the party will get the delivery but defer the price. We call it deferred Murabaha, right? Payment through installments. In Salam or Istisna, what we do, let's look at Salam. Salam, we take the price upfront and give the delivery later on. In Istisna, there is a flexibility based on several principles. We're not discussing that right now. So in general, if both counter values are deferred, that triggers Bi'ul Kali bil Kali, and hence it is not considered permissible, right? So this is an issue. When it comes to options contract, similarly, options are not considered as a valid form of subject matter. You will see that options are quite popular, especially in the FX forex market or commodities exchange, for example, or even in the stock exchanges. But in Sharia, according to AAOIFI Sharia standard, we'll see options cannot be traded. Yes, there are some Sharia considered options, but these are not what understood or what meant by options in the conventional market. So in Sharia, what are the options? For example, options of defect. When we purchase something and there is a defect, and the defect was grounded when it was with the seller, so then the buyer would have an option either to receive it, to keep it, or to return it, or in some cases not to return it, rather basically get a compensation or the price difference between the defected and the non-defected commodity or the subject matter. Then there we will see options of inspection, options of payment. So there are different types of options Sharia recognizes, but those options are not for trading. Options cannot be traded. Options are not mal. Options are not wealth. So we'll see this principle is being reflected in some of the Sharia standards. Similarly, when it comes to the subject matter of the contract, some of the thing that we can mention, for example, once again, I think this view should be better. Sorry. Do you see my full screen, brother Ahsan? Can you confirm?
Yes, Sheikh, we see your full screen. I
Okay.
was just saying, like in between, if you want to stop and ask Q&A and then continue, because it's a long, you have to be speaking. I was just saying,
Next slide, we have a question.
sure,
So just after this, inshallah, we'll stop for a while
sure,
and we'll of course answer some of the questions, inshallah.
inshallah. Thank you.
Okay. Yeah, you're most welcome. So in terms of subject matter, Few of the issues we will find everywhere in all types of sale contracts, and in fact in Ijara as well. So some of the requirements in a sale contract, in a subject matter for a sale contract is, for example, it has to be existent. So if it's not in existence, it's a gharar. In case of Salam and Istisna, there is an exception. Similarly, having ownership. So if there is no proper ownership, for example, in case of short selling, that's a gharar, and that will not be permissible. Not possessed by the seller. So we'll see there is a share standard, separate share standard IUFI on qabs, on possession, either having a actual or constructive possession. So if there is no possession, then it will be also a type of gharar, and it will trigger many other Sharia issues. If the quantity or quality is not specified, there also is a type of gharar regarding related to the subject matter. When it comes to delivery of the subject matter, so if we are selling debt or receivables, which the delivery is quite problematic, or at least uncertain, so we'll see a lot of gharar issues are there. And IOFI has issued a separate standard of sale of debt. You can see a lot of parameters have been mentioned to minimize those gharar, to ensure that there is no gharar, and people can trade properly. Sale of expected future cash flow, right? So the valuations today we do a start of valuations of future cash flow, for example, not for the assets that the company owns right now. So that also has an element of gharar that needs to be treated, minimized. By the way, whenever we are saying gharar, it doesn't by necessarily mean that it is impermissible. As I mentioned, gharar could be of different degrees, so it has to be treated based on the degree of the gharar. Sale of property illegally possessed by third party. Uh, this is also, there is some sort of gharar because the owner is not proper, and we'll see that there is a Sharia standard agency, wakala, and fuduli, right? So fuduli is the agent who is unauthorized by the actual principal. So in this case, we will have some parameters by Shari'ah as well. Sale of stolen goods, another gharar in the subject matter, because the delivery of the subject matter will not be certain because of selling stolen goods. In terms of the terms of the contract, if the price is not specified or the period of payment is not specified when it's a installment payment, there is also some sort of gharar which needs to be addressed. So with those, we will go to our first concept checker for today. But Rahsan, please help getting into a quiz. So there are four options here. Uh, the question is, Ms. Khadija is a school teacher. She announced in her grade 5 class that the highest achiever of the exam will get a reward. In this case, one of the contracting parties is unknown and the subject matter is also not determined. What is the share status of this contract? So do you see any gharar on this or not? So
Please,
just try to address. Can we get a
yeah,
quiz?
quiz pop-up will come, Sheikh. For the next one, they can type in chat.
All right. Okay. Okay. You can write your answer. You can write your preferred option in the chat box, please. Can we get few more responses, please? Yeah, thank you. All right, so the question is basically, if you look at the question, she announced that the highest achiever of the exam will get a reward. So in this case, one of the contracting parties is unknown and the subject matter is also not determined. What is the share standard? So when we are talking about a commutative contract, where both parties need to give a counter value, they have to pay or they have to pay a fee or price. So in this case, a gharar would be something that is not valid, either in the parties or subject matter. But when it comes to donation, when it comes to rewards, there is no issue. It's a non-commutative contract, so one party can donate anything in his own ownership without proper price or anything. So it's a very simple question, just to ensure that you are listening to us. So before we proceed, I think there was one question on standard number one. So as I asked, please, whenever you are putting any clause for your question, please paste the whole clause if you have the book in front of you. But for this one, let me try to help you. Session number 1242. Let me check quickly. If anyone has any other question by this time for the first three share standards, please ask. Otherwise, we'll proceed, inshallah. Two for two. Okay, we'll address it, inshallah, after at the end, inshallah. I think it's a long clause with two sub clauses. We'll try to finish first, inshallah, and then we'll try to address. Thank you for your question. I think the rest of the questions are basically related to the noise and other things. Okay, let's move forward. When it comes to Murabaha, okay, one of the very important share standard, not because it's a very important contract. Of course, any contract is important, but because of its wide usage in the Islamic finance industry. So if you look at the conditions of Murabaha that are required, first, of course, the offer and acceptance. Since it's a sale contract, it's a commutative contract, so we need offer and acceptance, ijab and qabul. In terms of subject matter, it cannot be gold, silver, or currency. By the way, what is Murabaha? Murabaha is basically where when during the transaction, the sold price, the cost price is mentioned together with the profit, or the profit amount is mentioned. In other words, there is a type of bay we call Bi'ul Amana, trust-based sales contracts. So in those trust-based sales contracts, the actual price, the cost price, and also if there is a profit, if there is a loss, that is disclosed. So the buyer knows exactly the actual cost price, and it is easier for him to decide. So it's kind of trust basically provided from the seller. Anyway, so in terms of Murabaha, Murabaha is the type of trust-based sale where the seller is selling on profit. So he will disclose the cost price plus the margin, the profit margin that he's going to have. Now, since it's basically a cost plus profit, the subject matter cannot be gold, silver, or currency. Oh, one more thing, sorry. When we are practicing this Murabaha in the Islamic financial institutions, we are also using another concept called Bay Mu'ajjal or deferred sale. So we are basically combining two things, Murabaha and Bay Mu'ajjal. Then it becomes like Murabaha Mu'ajjala. So it's a deferred Murabaha. So what happens is that bank or the financial institution procures the goods or the commodities from another vendor or supplier. Of course, in many cases, by appointing the client as its agent through proper agency contract and everything. And once the bank buys it, or the agent buys it and takes the possession on behalf of the bank, then it sells to the end client. So the transaction, the Murabaha transaction here is when it is selling to the end client, it's selling to the end customer, the one who is requiring the financing, Murabaha financing. Now we cannot do gold, silver, or currency here. Why? Because the end client is usually paying based on a deferred payment basis, on an installment basis. So as we saw in the very first Shari'ah standard, one of the primary requirement for currencies exchange is that it has to be spot. It cannot be, one of the counter values cannot be deferred. So if we have the subject matter of Murabaha, which is a deferred payment Murabaha, gold, silver, or currency, and the counter value, which is the price, is being paid on installment. So what are the issue? What is the issue we are having here? It's not a spot. It's a deferred payment contract, and it is not allowed for currencies. This is the reason why subject matter cannot be gold, silver, or currency. Right? But it's, if we look at general murabaha, let's say forget about the banking sector or the financial sector, is a general seller. He is basically selling by disclosing his cost and also the profit. So can he have the subject matter as gold? Yes, he can. Silver can. Currency, yes, can. The only thing would be that the one he is exchanging with, the price, it has to be a different category of currency. Like if he is selling gold, it has to be silver with silver or other currency. If he's selling gold for gold, then he cannot sell on profit, meaning that both has to be on equal value. Right, in terms of price, since Murabaha, in case of Murabaha, the seller discloses the cost price. So usually he will not only take the purchase price, but also some other logistics. So if let's say he's importing it, so there would be a shipping cost, there would be other logistical cost, warehouse, etc. would also be included. The question is, what are the type of costs he can include? So the answer would be, since it's a bay'ul amana, it's a type of trust-based sale. So anything which is direct cost to this can be included. But if it's not a direct cost, then he cannot include that as the cost price of this murabba. The received discount should be disclosed. So since we are only considering direct cost, so let's say the bank or the financial institution received a discount from his vendor, from its vendor. The vendor gave him, let's say, 10% discount after the contract, or I mean, it was not anticipated. So he also needs, the bank also needs to disclose that discount to the client, because that is what will construct the actual the price, the cost price. So if he's not disclosing the discount, then the cost price will be a lie, will not be truth. So it will infringe the amana. We need to be clear here that it's not that we are supposed to do by murabaha and we cannot do by mutlaqa, for example, general sale, where our day-to-day sale where we don't know the actual cost price from the seller. It's not like that. It's just that in the context of banking and financial institutions, to add more transparency, the scholars and practitioners have agreed to do murabaha compared to other general sales contracts, just to add transparency. And when we are doing Murabaha, we need to adhere to those things. All right. So cost and profit must be fixed and known, and unconditional rebate is acceptable. Okay. In terms of rebate, rebate is where, in other words, we can give some discount, right? Let's say the price is $100,000 and we give a rebate of 10% or 15%. Now, is this permissible? In general, yes, it's permissible. But if we are giving a rebate conditional to early payment and various other things, so this is where some Shari'ah issues comes into the picture. So let's say the price is $100,000, and if someone defaults, he will have to pay another 1%, for example. Is it permissible? No, it will be penalty that we already discussed. It will be riba. It has to be discharged to charity. Now, if we reverse the same thing, let's say the price is not 100,000, it's 110,000. But if you pay on time, you get a 10% discount. Okay, and then the actual price becomes $100,000. Now, is it permissible? So this is what we call conditional or unconditional rebate. So if it's a conditional one, this is where also many scholars consider it as also reverse riba. So we cannot do that. But if it is not conditional, the client pays earlier and the financial institution at its own discretion gives some rebate, there is no issue. So these are the fundamental things in case of Murabaha. Now, when we talk about Tawarruq, okay, so there is a separate Sharia standard on Tawarruq. Tawarruq is translated as monetization, but if we look at the flow, Tawarruq is just additional leg to Murabaha. So for example, the client needs some money. He needs some cash from the bank. Let's say he needs $100,000 from the bank. So bank would basically purchase a commodity worth $100,000 from the commodities exchange and sell it at $100,000, $110,000, let's say at 10% margin to the client. Okay, and the client will pay basically a deferred payment. So until this step, this was exactly what we had in Murabaha. But in Tawarruq, we have another leg. So the client doesn't want actually the commodity. The client wants cash. So the last is another leg of this would be that the client, either himself or by appointing an agent, would transact in the commodities exchange and sell the commodities at $100,000. So at the end, he's actually getting $100,000, which he needed. And since bank is investing $100,000 for him and has a target margin of 10%, so bank is getting at the end of the day $110,000. So that's what Tawarruq is in general. Now, since we have multiple legs here, so bank is first getting the product from the vendor because bank doesn't have this business of storing the commodities or selling the commodities. So definitely bank has to purchase it from a vendor or a supplier. Then after banks purchases it, it will sell it to the customer. After the customer gets it, it will sell it to the another seller. So we have three sales in place. So just like in Murabaha also, you will see that there are discussions in the Sharia standard about the qabs, about the possession. What are the different types of possession we can have, physical, constructive, and how the constructive possession can be different for different types of assets. So those are discussed in details. In Tawarruq, it's the same requirement. We have three different types of sales, and all the three different types of sales, in each case, the buyers should have physical or constructive possession. So in general, if you go to the Sharia standard on possession is by basically, of course, it has to be identified, it has to be specified, the commodity or the product, it has to be separated from the ownership of the seller, not mixed with the ownership of the seller. In other words, in Arabic, we call takhliya, right? And he shouldn't have any barrier to those products. So if the buyer wants to take the product, he will have the option to take the delivery. So those types of conditions are there mentioned in detail. And if those are fulfilled, then we can consider there is a proper possession. Similarly, another condition in Tawarruq is that the commodity should not be sold to the same party. So let's say the bank is in the middle. Bank got the product from seller A, all right? And then bank sold to customer, and then customer is selling back to seller A. So it's going back to the same party. The problem when it goes back to the same party is that it almost, I'm using the word almost deliberately because maybe in some cases we will not be able to classify it 100%, but in most cases it could be considered as a bay'ina or buyback. And bay'ina, as we know, according to the majority Sharia scholars, is similar to riba. It's a hila, it's a trick which is not permissible. So this is important. The commodity should not be sold to the same party. The contracts must be separate. This is a condition in all types of Sharia contracts where we are, engineering different types of contracts together. So there is a different Sharia standard as well. Al-jam'u bayn al-uqud, combination of contracts. So in that Sharia standard, we'll see that the contracts have to be separate. The contracts have to be standalone. Their fundamental requirements need to be fulfilled. So those are also valid in case of Tawarruq. So the three contracts, bank and vendor, bank and customer, customer and vendor too, for example. So all the three contracts need to be separate, and each of those contracts need to fulfill its own conditions. Then lastly, the customer should sell the commodity himself as far as the regulations permit, or through an agent other than the IFI. The IFI should not arrange proxy of a third party to sell on behalf of the customer. This is very important, even though the practice is not so much so according to this clause, but this is very important to separate the liability of the financial institution, of the IFI, and the customer. But of course, if there is a regulatory requirement that only the IFI can transact, then there could be separate arrangements as per the deliberation of the respective Sharia supervisory body, or the SSB of the financial institution. I would like to finish Tawarruq with one thing. If you go to the Tawarruq Sharia standard, I think most probably the last clause or one of the last few clauses, and also it is mentioned in the Sharia standard, in Sharia basis as well. The Tawarruq should be minimized. It should be used only when you don't have any other product to utilize. For example, there are some dire cases where the customer or the client needs only cash, and he doesn't need any asset, any service, so we cannot utilize those assets or the services for different types of contracts. So it's a very rare situation where we need Tawarruq. But however, there are many other contracts available in Islamic finance, and we should be innovative, and we should be trying our best to use those. If we are concentrating ourselves to Tawarruq, then we are basically lacking innovation, and this could be harmful for the industry in the long run. Okay, we have this slide, and after this and one more slide, and after this we'll go to another concept checker and also take some more questions. So in terms of securities, either it's in Murabaha, it's in Tawarruq, I think not in Tawarruq basically, but Murabaha, Salam, Istisna, or any other commutative contract we see in this AAOIFI Sharia standards, there are a few types of securities being mentioned. For example, in Murabaha Sharia standard, we'll see this, it has mentioned Hamish Jiddi and Arbun. Similarly, in the Sharia standard on guarantees, we'll see some of the securities are mentioned. So there is also a separate Sharia standard on Arbun. So what are the differences? In case of Hamish Jiddiya or security deposit comes at the stage of wa'ad. So for example, the client has come to the financial institution and says, I want to purchase such and such product from you. Can you buy it from the vendor? So in this case, if the bank agrees, so the bank would say, okay, you need to put a security deposit or Hamish Jiddiya. So that's what we call Hamish Jiddiya. Arbun is when the contract has concluded. Contract has concluded, but it's a big sum, and the client will not buy at once, definitely. So he's paying part of it as earnest money. It's just like confirming that strengthening the contract that I will be paying the rest of the amount. So that's what we call Arbun. Now, in terms of Hamish Jiddiya, the ruling is that if the customer backs out, if he says, sorry, I don't want to buy it, after the bank has purchased the commodity or the product, the customer says, sorry, I don't want it. So in that case, if there is an actual loss, it can be settled from it. So one important point here is how do we know what is actual loss and what is not an actual loss? So if we look at the different Sharia standards of AAOIFI, we'll get an understanding that actual loss is where there is an actual loss. So what does it mean? What do I mean? So for example, the bank has purchased a car, a car from a vendor for, let's say, $50,000. And it was supposed to sell to the client at $60,000 with a $10,000 or 20% margin profit. But what happened after the Hamish Jiddiya? So let's say he was required to put Hamish Jiddiya of, let's say, $5,000. So he put $5,000 as Hamish Jiddiya. But after the bank has purchased the car, the customer backed out. He said, I no longer want it. For whatever reason, for COVID, for this and that, I don't want it. Now the bank, what will he do? It will do with the car. It will basically sell to another third party, offer to another third party. So let's say if it was able to sell at $55,000, The original price was $50,000 and original selling price it wanted to sell at was $60,000. So it was able to secure $55,000, which is still $5,000 less than the planned price it had, but $5,000 addition to what it actually spent. Now, is there an actual loss or not? So there is an opportunity loss definitely of $5,000, but Sharia does not regard that as a loss. In Sharia, whenever there is an actual financial loss, so in this case, there is no actual financial loss. There would be an actual financial loss if the financial institution is able to sell it at any price below $50,000. So in that case, we will say, okay, there is an actual financial loss, and let's say the bank was able to sell it at $48,000, which is $2,000 less than the actual price. So in that case, the bank has made a loss of $2,000, and it can only recover those $2,000 from the Hamish Jiddi of $5,000, meaning that it has still need to return. It still needs to return the $3,000 to the customer. So this is Hamish Jiddi. Let's consider the same scenario for Arbun. So the car is for $50,000 and the contract was $60,000 done, sealed, but the customer has put $5,000 as Arbun, as earnest money. Like I'm coming back, all right, within a certain period of time and I will pay the rest. But at some point he said, sorry, I cannot complete the payment, I want to back out. So in this case, the ruling is a bit different. The IFI now, in case of Arbun, has the right to retain the entire $5,000, even though it did not make an actual loss when it is selling to a third party. But it is still better. So this is a key message here. It is still better to return any excess of actual loss, meaning that if the bank is able to sell it at any price more than $50,000, so there is no loss. It is good to pay back the excess to the client. Some other securities we'll also see in this Sharia standards, for example, promissory notes, checks, those are fine. The IFI can use it. Of course, the IFI should not use those before the due dates. So that's there. There are different types, other types of securities are also mentioned in the Sharia standards. We are not bringing all those here. Okay, difference between Salam and Istisna. I will just very quickly go through it and then inshallah we'll go to a concept checker and also get some questions. So two forward contracts or forward sales are Salam and Istisna. In both of those two contracts, what happens? We pay the price advance, like in Salam, the whole payment needs to be full and spot. Even though in case of Istisna, there could be some spot payments, the whole payment could be made on spot, or the whole payment could be deferred, or there could be installments, either of the three. But the notable thing is, in both cases, the delivery comes at a later stage. The commodity or the product delivery comes at a later stage. So usually in case of Salam, it's when the subject matter is homogeneous or identifiable, specifiable, fungible, or commonly available in the market, those types of products can be part of Salam, like agricultural goods and few others. In terms of Istisna, Istisna has the root word Suna, Swad Noon Ain, which denotes the meaning of manufacturing. So Istisna is a type of sale where the goods or the products require some sort of a construction or manufacturing process. For example, constructing a highway, an airport, maybe a metro rail station, right? Or maybe some machines or different types of manufacturing. Even the house constructions also could be used based on Istisna contracts. Now, the difference between the two is, of course, one is based on the actual underlying product. Secondly, also in terms of payment, as we mentioned. In terms of cancellation, in Istisna, before the work has been commenced, the buyer can unilaterally cancel it, or the seller also can unilaterally cancel it. But in Salam, it has to be always based on mutual agreement. But it is worth to be mentioned that if in the contract it is mentioned that one party cannot cancel or terminate it unilaterally, then of course that shall be followed. In terms of delivery date, for istisna, it's flexible. For salam, it must be fixed. It is a condition of salam that the delivery date and the place of delivery must be fixed. But for istisna, it could be flexible. In terms of penalty clause, for salam, it's not allowed, but for istisna, it is allowed. Like we can say, if you delay the delivery by 1 month, then there will be a penalty of, let's say, 5% or 10%, meaning that you will get your debt payment less than the pre-agreed amount. Okay, so those are very basic summary of Salam and Istisna. And this is a very simple question again, just to check if you are here. Let's run the poll. Let me launch it. Yes. I think Brother Hassan, you also started. Okay, never mind. So the question is, under what circumstances in Murabaha can various profit rates as benchmark be charged? So the options are: number one, Murabaha transaction is bifurcated into tranches. Number B, deferred Murabaha. Number C, spot Murabaha. And finally, none of the above. In other words, the question is, can the Murabaha price, the price can be benchmarked to any known benchmark so that the price is floating, it's not fixed. Is it allowed? That's the question. Okay, let me go through some of the comments. Okay, while you are answering the question, answering this question, let me answer some of the chats. How can I access the book? I need one, please. The book Share Standard is available in AAOIFI's website. You can just Google AAOIFI Share Standards and you will find it. Anyone can download. Okay. Q&A. Okay, there are some questions in the Q&A. All right, let's end the poll. Majority answered, actually not majority. So we have 38% for B and 38% for D. The question answer is basically based on the Shari'ah standard is D. So in Murabaha, since it's a sale contract, we cannot have it benchmarked to a floating rate. The rate must be fixed, the price must be fixed, right? So I mean, either the benchmark is going up or down, the price shall still be fixed. So this is an important element based on this Shari'ah standard. All right, before we proceed, there are some questions. Let me start with some. So one question says, like, based on AAOIFI, is it allowed for banks to give IBRA if the customer settles early and it is mentioned in the contract? So again, as I mentioned, if it's mentioned in the contract, then it is based on AAOIFI, it's problematic. If it's not mentioned in the contract, meaning that it's not conditional, it's at the discretion of the bank, because once it is mentioned in the contract, it becomes a right for the client. So that's where it gets linked with the contract. So just like we cannot charge additional when due to a time lapse, we cannot charge less based on less time. So whenever it is linked with the right of the client and linked with the contract, this is where we have issues according to AAOIFI. And yes, your understanding is correct. So if having a clause in documents so that the bank will grant IBRA if you settle early, but as we know, it is being practiced in some countries, but according to AAOIFI, it's not permissible. Then we have another question from Aisha. These days we have non-share activity while buying gold or silver. For example, gold, when we go to shop, we are experiencing the buying rate and selling rate of gold, which means that we sell the same gold, we get different price. And if we buy it, the price is different. This is fine. As long as we are not exchanging gold for gold and we are not transacting based on a deferred payment basis, it is fine to negotiate the price. So usually the shops, they offer a lower price when they sell, when they buy from the customers, some old ornaments, there's some tones or used ones. So that is fine. No Sharia issue just because of this. Also, they charge making charges. This is also fine because when they are selling gold, they are actually putting their own effort as well. So again, if we are not exchanging gold for gold, then the equality in the value is not a requirement. Only requirement is a spot payment, right? Not to have buy now pay later scheme, right? So if we are paying on a spot, then adding the making charges is still fine, and it's basically what's happening. The seller is doing some efforts as well, just like in Ijara. So it's valid for him to charge some fees. If we buy gold and silver online, is it allowed if we pay cash on delivery? This is a good question. The thing is, if the gold and silver are delivered on the same day, or maybe I'm just saying out loudly without, I mean, it needs further deliberation, but just thinking like if they deliver on the same day, or like T+2, for example, on the transaction day plus minus 1 or 2 days because of the shipping and delivery, maybe it would be allowed. But if it is quite uncertain, just like any other e-commerce platforms, we order today, we don't know, we have a range of days, but we don't know when actually it will be delivered, like 1 week, 2 weeks, sometimes even more if it is coming from other countries. So in that case, of course, it will not be permissible, because the requirement in sort of exchange in gold and silver and all types of currencies is that it has to be on spot. Silver, I have not seen the seller of silver jewelry giving the breakup of quantity, rate, etc., which usually is given in gold and bills. Is it permissible? Yes, quantity and quality is basically more important when we don't have the product in front of us. But if the product is in front of us, it is identified, and we know that, okay, this is the product that we are purchasing. So even though we don't know the actual weight, still it would be valid. So in that case, what will happen is that the buyer and the seller are negotiating the price of this product as a whole, not in terms of weight. So weight would be an indication. However, if the weight is the main method of calculating the price, then there should be transparency between the customer and the buyer and the seller. But still, if there is none, still it will be Sharia compliant. No, I don't see any Sharia issue. Okay, there is another question. I think some of the questions we can leave it for later on. Let me go back to the slides, and then inshallah we'll come back with the questions later on, inshallah. One question, maybe I will take it before I proceed to the next slides. Ibrahim Kazim asked this question: what is the benefit of having this certificate? This is one of the top most recognized, I would say, if not the top recognized, we can say safely that one of the top most recognized certificates globally in Islamic finance. As you know, AAOIFI is the most well-known standard setting body for Islamic financial institutions in terms of Sharia standards, governance standards, ethical standards, as well as accounting standards and auditing standards. So having this certificate will definitely give you a standard accreditation, and secondly, it will also give you a very basic understanding of the Sharia requirements, and especially if you go through the Sharia basis of each Sharia standard, it will also help you develop the Sharia logics. So even if you are not from Sharia background, even if you don't want to be a Sharia advisor, and to be honest, if you're not from Sharia background, this certificate doesn't mean that it will automatically make you a Sharia advisor. However, it will help you understand better in terms of Islamic finance, either it is in your individual life, personal life, or in the career. And last but not least, as you know, the Islamic finance industry is growing rapidly. So definitely it will be one way to keep yourself ahead of your peers. Okay, let's go to next slides. Sharia rulings for Musharaka. So you'll see in AAOIFI Sharia standard, we have Musharaka, we have Mudaraba, two Sharia standards for basically share partnership type of agreements, partnership agreements or contracts. We also have shares and shares. What is the title of the Sharia standard? I think shares, something like that. Anyway, financial papers, right? Sorry, financial papers, and there we have shares. And then we have sukuk. In sukuk also, we may have sukuk based on musharaka mudaraba. So anyway, the concept of musharaka and mudaraba, the main underlying principles, if we understand those principles, we can answer any type of queries for musharaka and mudaraba, inshallah. So one of the very important part of the rulings of Musharaka and Mudaraba is how we agree upon the profit and loss sharing. As we know, those are basically profit and loss sharing contracts. So how we determine and agree upon. The first thing is that a variable profit sharing ratio, having a variable profit sharing ratio is permissible, meaning that, for example, of course, we cannot have a lump sum amount mentioned as a profit. So let's say we cannot say between two parties there is a partnership contract. We cannot say, okay, you will get every month or every financial year you will get $1,000, for example, or $5,000, for example, because whenever we are fixing that amount, so what is going to happen is that the capital becomes like a guaranteed capital. So the capital is guaranteed, it is similar to a qard, it is similar to a loan. And when it's a loan, anything extra that we give, any increase we give, it becomes a riba. So we cannot give a fixed amount of profit. So what are the other options we have? Can we give a percentage of the capital? In other words, can we say, okay, if you, whatever amount you invest, you will get X percentage of your capital as profit? No, because that's the same thing. Like if we are saying 10% of $100,000 or we are saying $10,000, it's the same thing, because 10%, because the capital is well known. So if the percentage of that well-known number would also make it a well-known and fixed amount. So what we can have rather is a ratio, is a percentage of profit, and profit is defined as total expense, total revenue, gross revenue minus gross expenses. So after we deduct all direct expenses, we get profit. We can have a sharing ratio of that profit. So we can say, for example, that both of us would have 50-50 ratio of the profit. So if there is a profit of $1,000, after deducting the expenses, we share it $500 and $500. Very simple. We can have a variable profit sharing ratio as well. What does it mean? So for example, in year one, there would be 50-50. In year two, it would be 60-40. In year three, it would be 70-30, for example. But only thing that we have to remember is that the main condition here is that the way we design this profit sharing ratio, it should not deprive any partner from participation in profit. So for example, can we say, okay, we have, let's say, two projects or two companies, right? Both two partners, but they have two companies where they have invested their capital. So can they agree that, okay, I will take the profit from company A in year one, and you will take in from company B, and then in year two, you will take from company A and I will take from company B? They cannot. Why? Because it is most probable, I mean, it can verily happen that company A did not have any profit in that period, while company B had. So one party could have been completely deprived from participation in profit. This is not permissible. So in any given time, if there is a profit, there must be a participation. Even the participation is very, like 99 and 1, for example, it's still valid, but there has to be this participation of profit. So based on this principle, if we think few other things, for example, can we set a ceiling of profit? Meaning that, let's say there is a 50-50 partner sharing of profit, but they agree that if profit goes beyond $100,000, then one party will get all the additional amount after the $100,000. Can they have this condition? Yes. Why? Because if there is a profit of $100,000, they are sharing 50-50. If it's beyond $100,000, still they are sharing the $100,000 equally, and the only additional amount is going to one person. So there is no such scenario where one party could be completely deprived from the participation in profit. Now, can we determine a floor for the profit? What does it mean? So whatever the profit is, you will get at least, let's say $5,000, at least $2,000. Can we agree on this? No. Why? Because the profit could be less than $2,000. And if we are giving this whole amount to one party, because we agreed that we will give you at least this amount, then the other party could be fully deprived, which is not Sharia compliant. So this is the very principle of profit and loss sharing, profit sharing. And when it comes to loss, loss only has one principle, and it cannot be agreed. It cannot be tweaked. It cannot be left to any party's discretion. So it has only one formula. And the formula is that everyone will bear the loss according to their capital contribution ratio. So if someone has contributed 50% capital, he will bear 50% loss. Very simple. Only if there is a negligence, proven negligence or breach of contract, okay, then the person responsible will bear the loss up to the capital, not profit, because there is no profit. No one can guarantee profit in any time, even there is a negligence, because profit, if there is a profit, there is a share, everyone shares the profit. If there is no profit, meaning that there is an opportunity loss. Someone did a negligence, and because of that, there was a loss in the capital. If he did not do negligence, maybe we could have profit. So this tendency that maybe we could have, this is what we call opportunity loss. And as I mentioned earlier, there is no place for opportunity loss in Sharia. We don't consider this as a actual loss. So when there is a misconduct, he will only top up until the capital, just recover the capital. All right. So I hope this is very well understood. And one more thing is that profit can be distributed either based on actual valuation or constructive valuation. In other words, either based on actual liquidation or constructive liquidation. What we mean by actual liquidation is closing the business. Project is closed. So we know exactly how much money we have received, how much revenue we have earned, how much profit we have made. Constructive liquidation is like end of the financial year, we value the assets, the fixed assets, the intangible assets, blah, 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 and then we get some numbers, and based on that, we can decide if there is a profit or loss. So if it meets the criteria of constructive liquidation or valuation, then based on that also we can distribute profit. We can say, okay, we have made such profit in the last financial year, and based on that we are distributing among the parties. This is also valid, no issue. All right, sometimes maybe profit is advanced on a provisional basis, on an expected profit rate basis. So that is fine as long as once there is actual profit calculation based on actual or constructive liquidation, it is settled. So meaning that if earlier the profit distributed was higher, then in this period it will be settled, meaning that maybe they will recover some amount from the client, or maybe they will have nothing else to distribute. If it was lesser amount earlier, so now they will basically distribute higher amount to ensure that it is properly settled. So I hope this whole formula of profit and loss in Musharaka is well understood. In Mudaraba, if we consider Mudaraba, what is the basic difference between Musharaka and Mudaraba? In Mudaraba, one party gives money, one party gives capital, and the other party just works for it. Other party is entrepreneur, or he's just a business owner, and he takes the money and he does business. So that's Mudaraba. In Musharaka, we may have two or more parties, and everyone would put capital, and some would take the managerial roles as well, the management works as well.
entrepreneurial roles as well. Or maybe everyone would participate in the management. So since in Musharaka everyone puts capital, so in terms of loss, we said everyone will bear it based on their capital ownership ratio. But what will happen in Mudaraba? Mudaraba, only one party is investing, right? Their capital. So in that case, since the capital 100% is given by the Rabbul Mal, or the owner of the capital, he will have to bear 100% loss, because as I mentioned, loss only has one formula. Only if there is a negligence or breach of contract by the mudarib, by the entrepreneur, in that case, he will have to bear the loss until the capital, as I mentioned earlier as well. Okay, in terms of diminishing Musharaka, so when you are going to the standard on Musharaka, you'll see at the very end, it also mentions about diminishing Musharaka, which is a very popular product in Islamic financial institutions. In some countries, also known as HPSM, or higher purchase under Shirkatul Milk. In some countries, the product Al-Ijara thumma al-Bay', it's also a bit similar to diminishing Musharaka in some contexts. So how it works in very summary is that the client wants to buy, let's say, usually it's done for property. So he wants to purchase a property, and the bank would require him that he puts 10% or 15% or X percentage of capital or price of the property, and the rest will be financed by the bank. Now, how it will work is that both parties will be co-owners in this property. So this is what we call musharaka here. So this musharaka is not for a profitable venture. Rather, this musharaka is just a joint ownership, a co-ownership in the property. Now, since the client is using, I mean, what he will do after this purchase, he will be using that property right away in most cases. Now, since he will be using the ownership of the bank, so he will be basically also paying a rent for such usage. So every month he will have a installment which will comprise of the sum of the property price, and also some of the rental amount, right? So until some point, so what we mean by diminishing is that banks share will diminish, will go gradually down. And on the other hand, the customer's ownership will gradually rise. At some point, there will be a sale contract or a hiba contract just to transfer the ownership to the end client. So that's basically diminishing musharaka. So since we are saying it is a musharaka, so all other principles of musharaka or rulings of musharaka will apply. And if there is an undertaking, usually in diminishing musharaka, definitely there would be, in practice, there would be an undertaking by the buyer that he will basically purchase, or the seller that he will sell at some point of time the property, like either the bank or the client will give a promise. So this promise and undertaking has to be separate and independent. It cannot be linked in the same contract. Can there be a binding promise that I'm giving a binding promise that I will buy the share of the bank? Yes, it can be done, but the price cannot be agreed upon. The price must be mentioned as that price. It will be based on the market value, or agreed upon during the sale agreement at a later point of time. So other than that, I think I have already covered the rest of the thing. In terms of Mudaraba profit, I think this we already mentioned and shared in the discussion of Musharaka. So let's just proceed with this question. So as you see in the question, a binding promise by a partner to acquire another partner's equity share is not allowed if it is according to there are 4 options. Please choose the correct option. Okay, we have, subhanAllah, a lot of varying answers. Uh, though majority we have for question A. So basically the question is which one is not allowed, right? So if in a in one of the partners they give a promise that we will purchase the equity of the other partner, and he's giving the promise that I will purchase at the face value of the equity share. So let's say the capital was for uh, 5,000 and 5,000, let's say total $10,000 capital. And one of the party is saying, I will purchase your share in this Musharaka or in this, in this Musharaka for $5,000 at the face value. What actually he's doing? He's saying, in other words, that I am guaranteeing your capital of $5,000. So the moment capital becomes guaranteed, it becomes like a loan. And when it is a loan, anything addition to that, anything linked with that as an extra makes it a riba. So that's the reason they cannot agree on the face value. So this is the correct answer because the question was which is not allowed. So face value is not allowed. Market value is definitely allowed. Even agreement of the two parties during the sale contract is also allowed. And that's what we mentioned earlier as well. Okay, so let's spend some time on some questions. Let me see what are the questions you asked. Very educative, thank you. Okay, in Q&A, we have few questions. What about Visa card transferring from one US account to second Malaysia ringgit account? I don't see any issue. What is the potential issue you are seeing? You can share. I don't see any issue. It's just transferring of funds. That's fine. Interesting lectures. Are you taking private lectures? Okay, in TAIF, there is a program on CISA preparation. So that's in English. In Adil, we don't. We have customized programs for institutions. So that's a very customized program, not like a public one. We help people prepare for IOP CISA exams and SIPA exams. So you can reach out either to TAIF or Adil for further answers. Thank you. Can installation charge be included as a direct cost in calculation of Murabaha sale price? If the Murabaha asset required to be installed, and how it is installed, usually installation charge is not part of the acquisition cost. But if it is also I mean, the agreement is that it will be sold and also installed, I think there is no issue if that is included in the direct costs. Thank you. Okay, is CISA certificate the same as a diploma level? Maybe we can consider it that way, but yeah, IOFI does not market it or promote it as a diploma. But I mean, it maybe it's based on the industry recognition. Like if you look at the Islamic financial industry, more or less globally, it's very well recognized. I can say that. So perhaps other diploma may not be well recognized. So it's more on who is providing the certificate. IOFI as an institution is very well regarded in this industry. Can you please shed more light on opportunity loss? I think there are definitions you can watch out online, but in a very general sense, if it's not an actual loss, it's just an opportunity that we have lost, opportunity to make profit, opportunity to earn higher revenue. That's what we call it as opportunity loss. So in Sharia, when we are talking about compensations, when we are talking about making up that loss from the other party, we don't consider that one. We are not saying that calculating opportunity loss in our internal assessments, etc., is not Sharia compliant. We're not saying that. It's just that when we are passing that loss to another party for compensation purposes, we don't consider this as a actual loss because there was no actual loss. Actual loss is only when we have actual financial loss. Yeah, I hope that answers. Assalamu alaikum. Can I apply for CSAA program? Inshallah, I'm planning to study and get the certificate. Thank you. Yes, walaikum salam. You can do, definitely. You can do through TAIF. You can register for the CSAA program. And the last 2 batches of CSAA program for this current curriculum is only until this year. After this, they will have a complete new curriculum, which will be much more comprehensive. Okay, Yasin, you have asked, Walaikum Salam Alaikum, the Mudaraba calculations in exam. Could you please enlighten us on the ways it will be in the exam? No, in the exam, there will not be any Mudaraba calculations. I'm sorry if I have confused some of you for the numbers that I have been mentioning without those having in the slides. But what I was just trying to give you is an overall glimpse of how the actual loss looks like, how we share the profit, etc. But in exam, usually no calculation types of things are not coming. If it's an accounting exam for SIPA, perhaps maybe there is calculations, but for Sharia standards in CISA, we don't have calculations. Okay, thank you. All right, with that, we can proceed. Bismillah. Okay. All right, now in terms of Ijara, Ijara is basically a rental agreement, right? We may have a rental agreement for or rental or hires. Even Ijaratul Ashkhas, there is another Sharia standard of hiring of persons. So if we are talking about Ijara, normal Ijara, like rental of house or any other such asset that we can consider as normal Ijara, then we have also Ijaratul Ashkhas or hiring of persons. Usually that's considered in case of employment contracts, freelance contracts, etc. If you understand one thing very properly, then inshallah anything in Ijara you will find it very simple. Ijara is also a type of sale contract. It's also a type of bay'ah. It's also a type of sale. Only thing is that the subject matter here is not the asset itself, rather the utility of the asset, benefit of the asset. So that's the main thing. For example, in a sale contract, we sell the car itself. But in Ijara contract, we sell the utility of the car. So the right to use the car for a certain amount of time, for a certain duration is what being sold in Ijara contract. That is the basic difference. Now, since both are sale contracts, I mean, from that point of view, the underlying requirements more or less are same in the sense that the asset needs to be specified, right? In a normal sale contract, in a Murabaha, you need to specify the car. In Ijara, you need to specify the utility of the car. So how do we specify? We can specify by duration, like you can specify by distance. Like if you have an e-hailing service in your country, like Uber, Grab, or there are many others in many other countries. So distance is one way to specify, time is another way to specify, different ways to specify the utility, but it must be specified. In some cases, the asset specification of asset together with the duration, etc., is what we need. For example, if we are renting a machine, if we are renting a maybe like car also, yeah, that also applies. Unless for e-hailing service, usually it doesn't matter much, but for other types of renting of car, that matters. Several other types of utility as well. If the asset is specified, that is one of the main specifications. But there are some others. For example, if we are renting a house, the house would be specified, right? Or at least identified that this is the house that I'm going to rent. But that will not be sufficient. We also need to put a duration for 1 month, for 2 months, for 1 day, for 2 days, right? In the hotel, for example, the rooms, executive rooms, single room, this room, that room. So we need to specify that, and then for the duration, 1 night, 2 nights, etc. And since it's like a sale contract, in a sale contract, we fix the price. Here, we fix the fees. We fix the rental amount. So this is the very, very basic similarity and differences. Now, there are some other things that we have to consider when we are renting out. Since we are not getting the ownership of the asset itself, rather the ownership of the utility. So when we are using the asset, definitely there will be wear and tear. Like now, who will bear the expenses of fixation? So this is an important consideration in Ijara. The normal rule is the expenses which are related to day-to-day expenses, right? Day-to-day maintenance costs, those are to be borne by the lessee. But if there are ownership risks and costs which are not part of day-to-day maintenance, those are to be borne by the lessor, the owner of the asset. In terms of guarantees, can the lessor obtain guarantees from the lessee? Yes, because there is some debt. There is some debt payment whenever, so let's say we are renting a house, that the rent would be payable every month. So every month end it becomes a debt, and for any debt to secure, we can use permissible guarantees, no issue, right? And if there is a negligible, if there is a loss resulting from negligence, misconduct, or breach of contract, this could be also compensated in terms of guarantees. Now, if there is some, the asset is sold to the lessee, the ijara will be terminated. If it is totally distracted, the asset is totally distracted, let's say due to fire or any force majeure issue, it will be also terminated. If it's partially distracted, that time there will be an option for the lessee to terminate or to stay. If it's sold to third party, it will continue. So the relationship between the lessor and the lessee will be with the new lessor, new owner. That's it. And parties can also mutually agree to amend the contract, like amend the duration, amend the rental amount. So those are fine, and Sharia wise, no issue. Now, in terms of ijara muntahiya bit tamlik, which is also known as aitab in some countries like ijara thumma al-bay', as I mentioned, it is quite similar to the diminishing musharaka that we have discussed. So what happens is that in the initial stage, it's a lease. It's a financing lease basically. It's not an operating lease. It's a financing lease. Basically, we are giving this lease so that at the end of the day, the client owns the asset. That's the intention. So what will happen is every month there is a lease amount. There is a rental amount to be paid. Now at the end, it could be a sale contract. So for example, let's say Boeing or Airbus, usually they may rent or lease to the different airlines company, right? So they may lease for a certain period of time, and at the end they can have a sale contract, okay, selling the airplane, for example. Or there could be a gift. So without selling, it's just saying, okay, we gift it to you because they already recovered the sale price. Or it could be structured as a diminishing musharaka, which we already discussed. So both parties co-own, and one party's ownership diminishes gradually. So either of the three would be fine, and no Sharia issue. Only thing is that whenever there is a selling, we have to be considerate. We have to consider that the selling price cannot be agreed on a face value, especially when it is a diminishing musharaka. This is the only thing, but other than that, the rest of the options can be utilized. Now let's talk about Juara. You see, one of the Sharia standards talks about Juala. What is Juala? So in Ijara, we know exactly what type of work needs to be done, or what can be specified. Let's say Ijaratul Ashkhas, hiring of persons, right? So we employ someone for a specific type of work, if it's a freelance work, or for a specific duration, some specific roles, right? Just like general full-time employment. So this is how Ijara works. In Juala, we don't know how much work it will require, but what we know is what we want to achieve, the end goal. For example, we want to recruit a salesperson. We don't know how much time he has to spend, how much effort he has to put, but what we want is that the things to be sold. He needs to bring more clients, right? So in Juala, we don't consider the work, the amount of work, rather we consider the end outcome. And we specify a ju'al, commission or a reward for that outcome. So for example, if it's if it could be utilized for recovery of the debt, So whoever can recover, let's say the loans or debts from the defaulters would get X percentage of the debt amount, for example. Then in case of sales as well, as I mentioned, so whoever can complete sales, he will get, let's say, X percentage of the sales. So one salesman may spend, like 1 month for one client. Another salesman may spend like only 1 day for several clients. So there could be a difference in the efforts, but we specify through the outcome. So there are some sort of gharar, some sort of jahala here, some sort of uncertainty here, because we don't know actually how much work he needs to do, even if he actually needs to do any work or not, as I mentioned. But we see some precedences in fiqh, in Shari'ah. For example, this verse is from Surah Yusuf, whereby when I'm not going to the whole story, so it mentions that وَلِمَنْ جَاءَ بِهِ حِمْلُ بَعِيرٍ. So whoever finds the property or the asset of the king, he will have certain reward. So in this verse, we get a precedence that, okay, we may specify the outcome and specify reward for that. So that's what Juala is, and we have a lot of applications of Juala in modern Islamic finance financial institutions. Wakala. Wakala is agency where we appoint someone to do something on behalf of us. So we as the principal, we should have that proper authorization, and we authorize some other person to do that on behalf of us, right? So the wakil will get a certain fee. He may get a fixed lump sum as a fee. He may get a X percentage. Let's say if it's a wakala bil istismar. In Shari'ah standard, you will see one of the Shari'ah standards is about investment agency, wakala bil istismar. So we are giving, let's say, $100,000 to someone to invest it. So the fees can be determined as a percentage of total funds as well. The amount of funds that he manages, like 1% of the total fund, 2% of the total fund. So in wakala, basically, it could be with fees or without fees. Definitely, when we are talking in consideration of Islamic financial institutions, in many cases, the wakala will be with fee, but there could be without fees as well. So that is permissible. Similar to wakala, there is another concept called fuduli, unauthorized agent. So in some cases, I may sell on behalf of someone, but he did not authorize me. So it's someone else's property, I have sold it, but I actually didn't take a permission from him, right? Usually in the context of Islamic financial institutions, it happens when the financial institution did something or did not do something on behalf of the client, which it was not authorized. So in such cases, the ruling is, if the permission or the consent has been taken, I mean, of course, afterwards, after the thing has happened, let's say I sold property of someone to someone else, right? So it will be hanging now. The ruling will be hanging. I have to take consent of the owner. Do you consent or do you approve this transaction that I did on behalf of you without you authorizing me? So if he says, yes, I approve, then the entire transaction is done. If he says, I don't approve, then the entire transaction is void. So that's unauthorized agent or uncommissioned agent or fuduli. So those are all relevant contracts in Islamic finance. You will find it being used in one cases or another. So we just try to have a very macro level overview of those concepts for the sake of today's session. And this is another concept checker for you. We open the poll. Yes, here it is. So please read the question and choose your preferred answer. Thank you. We will run the poll around for 1.5 minutes, inshallah. All right, thank you for your participation. I see 52% goes for option D, and yes, that's the correct answer. But I see a good amount of confusion choosing A, B, C, and D. So if you look at the question, if in a car ijara, which of the following is the responsibility of the lessee? So again, the responsibility of the lessee is only day-to-day maintenance, right? So if you look at Takaful cover, is it a day-to-day maintenance? No. If you look at service and oil change on completion of certain mileage, this is day-to-day maintenance. If you look at registration and annual tax, this is also not day-to-day maintenance, rather it's a ownership related expense. Finally, if we look at usual wear and tear, yes, this is a day-to-day maintenance. So only those two, number 2 and number 4, those are the correct options in those are the options in option D. So I hope this answers your confusions. There are few more questions. Let me go through. Dr. Abdullah Shuhaib asked, please elaborate a bit on Juala does not require acceptance. Okay, Juala, yes, Juala does not require acceptance, meaning that Juala could be like an open offer. So we can make a public offer or a group of people, and for it to be valid, it does not require an acceptance from the worker, from the amil. If we look at Ijara or Wakala, it requires acceptance from the worker, from the one who will work. But in Juala, it could be an open offer, right? So as long as the work has been done, the outcome has been achieved, he will deserve the reward, the ju'al, which was mentioned in the offer. So that's basically what is been meant by it is not required. It does not require acceptance. Yeah, you're most welcome. Thank you. Okay, let's go forward. Definition of sukuk, I'm skipping that. I hope sukuk definition is well understood. Conventional bonds and investment sukuk. So in general, definitely sukuk is an Islamic alternative to bonds, but definitely there are a lot of differences. We have the sale, lease, partnership, different types of contracts being utilized. And usually there are specific type of assets or economic activities underlying, and the tradability would be depending on the underlying structure of the sukuk and also the status of the assets. It's not guaranteed by the issuer, and the use of proceeds are limited to Sharia compliant assets and avenues. So those are some very top level differences between sukuk and conventional bonds. Now, if you go to the Sharia standard, since different types of contracts can be used, so which one is tradable, which one is not, and what are the other types of requirements, those are detailed in the Sharia standard. We'll not go through those here for the sake of today's session. In terms of insurance, if you go to the Sharia standard on insurance, Islamic insurance or Takaful, so you see the reason why we need a Islamic insurance is because the conventional insurance is questionable in the light of Sharia due to three main reasons. So we have existence of riba, because the conventional insurance is basically a commutative contract, a sale contract. Now, what are we purchasing or what is being sold? Money is being basically a sale of some money or premium by the insurer for more money. Basically, money is sold for money, in other words. So when money is sold for money, and that's the other counter value is a higher amount of money, this is exactly riba. Right? So we cannot have that. Gharar, the parties don't know if the loss event will occur and when it will occur and how much it will cost. So hence the gharar is there. And finally, a bit of qimar, a bit of gambling is also there, because the party will either lose or gain contingent upon the occurrence of an uncertain event. So due to those three fundamental prohibitions of Sharia, being existing in the conventional insurance, the Sharia scholars say that it is not permissible. Now, what is the alternative? The alternative model mentioned in the Sharia standard is about takaful based on the concept of tabarru' or donation. So basically, the participants donate their contribution amount, which is in a conventional insurance, which is a premium. So they basically donate. They do tabarru', they do charity. And since it is a donation without a counter value, hence you can have uncertainty, you can have things contingent, no issue. I mean, so any other issue that we have discussed so far will not apply, none of those will apply here. Now, because it's a donation, so if you go to the Sharia standard, a lot of things will apply based on those. So, and also some of the things that are mentioned, not really Sharia issue, rather a governance issue. For example, the operator should maintain 2 separate accounts so that they don't take money from that account. They keep that account separate. So these are more a governance issue, rather a Sharia issue. Then what is the relationship? The operator basically would be like an agent to manage the fund. So they may invest as a mudarib or investment agent or wakil. There could be profit or loss as well, since it will be managed as a mudaraba or investment agency, investment fund. And if there is a surplus, how the surplus will be distributed? Will the operator get the surplus? No, rather it will be distributed to serve the common interest of the participants. Again, because it's a tabarru', it's a donation, so everything will revolve around that concept. And when the company is liquidated, so all reserves will be spent on charitable purposes because it's donation. Then we will, of course, preference will be given to policyholders to participate in the management of the insurance operations through appropriate legal arrangements. But there could be a separate company as well, acting as an agent. And companies shall adhere to the rules and principles of Islamic insurance. Sharia supervisory board is required. Anything, whenever we are talking about Islamic finance, definitely there has to be a Sharia governance in place. So a Sharia supervisory board must be there. Okay, so this is a very quick glimpse of Islamic insurance and takaful. There will be another Sharia standard, which is Islamic reinsurance, which is almost the same principle, because the Islamic insurance will be basically dealing with the Islamic reinsurance on the same concept of tabarru'. But yeah, since sometimes we may not be having Islamic reinsurance, there will be conventional insurances. So some of those things are discussed in those Sharia standards, which we will be skipping today. So again, another question here for this point. And after this, inshallah, we'll go to the last part. Let me open the poll again. We'll run the poll for around a minute, inshallah. Okay, thank you for your participation. Yeah, I think we did not cover here today this one in the slides, but if you have gone through the Sharia standard, it's a very easy question, easy answer. The answer is actually B, the right answer. B is the shareholders' funds. So operating expenses for the company will actually be borne by shareholders' funds, not the participants' funds. Okay. Thank you. Okay, some of those things I will skip because I think in general I discussed more or less. So there is a Sharia standard on guarantees. Basically, we can have different types of guarantees like personal guarantees. Sorry, personal guarantees in trust contracts and agency Mudaraba is strictly prohibited. We can have guarantees, but we need to see where are we having the guarantees. If the guarantees are in a trust-based contract, let's say in a Mudaraba, the Mudarib is supposed to act based on trust. He is managing the funds of the Rabbul Mal based on trust. So unless there is a negligence, unless there is a misconduct or breach of contract, he is not liable. So if we are taking a guarantee from him to utilize it in all circumstances, whenever there is a loss, then it is not permitted, it is strictly prohibited. Same goes for Wakil, same goes for any other trust-based contract like Musharaka as well. Of course, if there is a misconduct, breach of contract, or negligence, that capital can be recovered through that personal guarantee. Similarly, a guarantee to recover the amount of the lease rental if the leased property is damaged for no fault of the lessee is not allowed. Because if there is no fault of the lessee, then it's a total damage of the property. The Ijara will be terminated by default. However, if we want to still recover the amount from the guarantee, it will be a zulm on the lessee. So it's not allowed as well. Okay. Credit cards. The second Sharia standard is about credit cards and debit cards. By the way, there is a new Sharia standard replacing the old one on payment cards. I think it's not yet translated into English. It's still in Arabic. So it's quite comprehensive, but if we go to the old one, so some of the things we highlighted here, like what are the things that IFI can charge? The IFI can charge service fee for cash withdrawal, no issue, commission on accepting payment from the party accepting payment, but not from the cardholder. So from the cardholder, if the cardholder is paying, can IFI charge from the cardholder for the payment? No, but from the a merchant that is receiving the payment through, let's say, POS, a machine, they can charge a fee on that one. That's fine. The IFI is bound to pay the party accepting the card. The cardholder is bound to reimburse the IFI for the payments made on his behalf. And it is permissible to also purchase gold, silver, or currency if the settlement is at a spot. So even through credit cards, if the settlement is at a spot, still we can purchase gold, silver, or currency through the cards. So you can go through the Sharia standard. There are a few more things we are skipping for today's sake. Then there is a Sharia standard on Rahan, on mortgage. Now, few things we have highlighted here. So firstly, the Rahan asset, the asset that is being provided as a collateral, as a Rahan, is a trust at the hand of the creditor, right? So any appreciation and income of the Rahan asset will also be considered as collateralized unless otherwise agreed. Now, can the Rahin is basically the owner of the asset, right? So he basically pledged that asset with the creditor, right? Now the question is, can the owner of the asset still benefit from the asset? Yes, if the Murtahin is the creditor. If the creditor gives the permission, he can benefit. But can the Murtahin, the creditor, enjoy the asset, the benefit of the asset? No, he cannot enjoy free of charge from the asset with or without permission. Because if he is enjoying the asset free of charge, what is happening actually? He gave loan, or he has some debt receivable from the owner of the asset, right? And this is why he got this collateral, he got this Rahan. Now, once he is enjoying the benefit of this asset without paying for free of charge, he is actually taking a benefit on top of the loans, on top of the receivables. So there is a qaida, there is a legal maxim that kullu qardin jarra naf'an fahuwa riba. So all loans which brings benefit. So I give someone loan $100,000 and he is paying me $100,000. But I am saying that you should also give me your car for one month for me to use it. So even though I'm not taking a monetary benefit, still I'm taking a non-monetary benefit. And that benefit is linked to this contract, this loan contract. This is also riba. This is why if the murtahin, the one who took the asset, the creditor, if he really wants to use the asset, he needs to pay standard fee, standard rate, standard rental. He shouldn't be given a special rental amount just because he is the creditor, he is the lender. No. If he enjoys any special discount, that will also be considered as a benefit against the loan, which will be riba. Okay, this is a quick question. And after this, inshallah, we'll start governance standard, the 4 governance standards, which will be very quick one, inshallah. So this poll will be run only for 1 minute. So please respond. Thank you. Oops, looks like the poll was ended. Let me relaunch it. Sorry. All right. Thank you for your responses. Yes, the majority chose option B, and that is the correct answer. So stipulation of guarantee is prohibited in a Musharaka contract, right? Why is it not prohibited in Murabaha or Qard? Because in Murabaha, it's a debt. In Qard, it's a loan. And loan by default is guaranteed. So taking a guarantee or security for a guaranteed amount is fine. But for Musharaka, capital by default is not guaranteed. So the moment we are taking guarantee, it becomes problematic unless we are utilizing it for misconduct, breach of contract, etc. All right, last few slides for governance standards. Okay, the curriculum of this exam is governance standard number 1, 2, 1, 2, 3, 4. And out of the 4, the first 3 are basically for Sharia governance. So just to share with all of you, AAOIFI has recently, together jointly with IFSB, has published a Sharia governance framework, which is very, very comprehensive, and which will, once it is published, it will supersede other Sharia governance standards that has been published earlier. So all those that we will be preparing for exam, after exam, you should look at that one, because once that is published, it will supersede the other ones. All right. So the first governance standard is about Sharia Supervisory Board. Whenever we are talking about Sharia governance for an Islamic financial institution, the very fundamental pillar is having a Sharia Supervisory Board, a board that will have a responsibility of like kind of supervision and giving fatwas, the responsibility, giving reports to the shareholders that the entity is entity is Sharia compliant in all its activities, in all its products, etc. In terms of composition, in this Sharia standard, what it mentioned is that they should have a independent body of specialized jurists in fiqh muamalat. Jurist means faqih in fiqh muamalat, who understands the Islamic transactions, and at least 3 members should be there. There could be one member who is non-Sharia background, but he's profound he's an Islamic finance expert, but also profound in Sharia. Those are the things that are mentioned. But if you look at the latest Sharia governance framework, as I was just mentioning, you will see that there are provisions of including other non-Sharia Islamic finance experts as well, like legal, accounting, etc. However, the Sharia background people must be majority, and if there is any Sharia decision, the Sharia decisions must be taken solely by the Sharia background members, Sharia scholar members. So there will be a bit of difference from this governance standard number 1 and the newly draft issued by the IOFI. In terms of powers of SSB, of course, whatever resolutions they provide will be binding on the IFI, and they should have access to the data, the records, whenever they want, without any restrictions. Okay, so these are very fundamental information from the governance standard. Some other things, for example, in terms of role of SSB and the independence. So they should have independence. They should have objectivity. Independence is very much a requirement. In terms of responsibility of who is responsible or who is accountable to ensure Sharia compliance, the management is the one who is accountable. The management is the one who is responsible. And the external Sharia auditor could be there to express their opinion. By the way, the external Sharia, the one standard on external Sharia auditor is not part of the curriculum, so you don't need to prepare this for the exam. And okay, this is our last concept checker. By the way, so that's a very high level summary. If you go back to the Sharia governance standards, so the first one again is about Sharia Supervisory Board. The second one is Sharia Review. Sharia Review is one of the things that Sharia Supervisory Board will do. Then the third one is, I think, internal Sharia Review, most probably, which has a bit of similarities between the Sharia Review and internal Sharia Review, only that in internal Sharia Review, it's basically a responsibility of an internal department, not under the Sharia department. It's an internal department which is basically helping the management to discharge their responsibility. That's it. And then finally, it's an audit and governance committee, which is just like any conventional corporate institution. They will also have some responsibilities, but one of the key responsibilities they will have, which is specific to Islamic financial institutions, is to also ensure Sharia compliance. So that's how it is a bit distinctive, right? So if you just go through all these and remember that in end of the day, for all the governance standards 1 to 4, the responsibility lies on the management. So if this is well understood, then you can, if you go through the governance standard now, you'll see things are very much clear. And in terms of Sharia review, it's a whole detail mentioned in the standards, like how the reviews will be done in terms of planning, in terms of execution, and then recording, reporting, etc. Those are quite similar in Sharia review and internal Sharia review. It's just that 2 different teams are doing that. So I hope with that, I think we came to almost end of the session. Just before that, I think I already explained that, but it's a very easy one. Let's see if you have been attentive, so you can choose an option. Inshallah. All right, thank you so much. As majority have chosen the answer C, that's the correct one. Thank you so much. So SSB members may include an expert in IFI, but it is, as I mentioned, in the latest draft of the Sharia governance framework, it is mentioned in a different manner. So there could be more members, but the only thing is the Sharia scholar members must be the majority. All right. So before I hand over to Brother Ahsan, I think some of the questions I see in the Q&A. Let me go through very quickly. Mr. Murshid, you mentioned, can you show the previous slide? Sorry, which slide you mentioned? I think I will have to close your question. If you answer it specifically, maybe we can go through again, and you will also have the slides later on, inshallah. Sharia review and Sharia audit is different. Sharia review can be done by internal Sharia department, and Sharia audit is done by internal audit. Things actually, when these governance standards were published, things were based on those governance standards. Sharia review is the job of Sharia supervisory board. Internal Sharia review is the job of another internal department. Sharia audit, internal Sharia audit is a separate bit of overlapping is there, but separate departments. But in the latest governance, Sharia governance framework, which is consolidated together with IFSB, things are much more organized, right? So for the exam's sake, you just need to go through the governance standard. And later on, as I mentioned, you can go through the new standard, inshallah. What is the difference between Arabic governance syllabus or English governance syllabus? In Arabic, there is a book, I think, most probably Barnamij al-Mudaraba Shari'ah, if I'm not mistaken. That has to be fully read through and prepared for the exam. In English, it's just the governance standards 1, 2, 3, 4. That's the major difference. Is it permissible for an operator to share a surplus on the following ratio? 80% to the participants and 20% set aside by the operator as contingency fund to meet any unforeseen claims by the participants in the following year? I think no issue. I most probably no breach with the IOFISH standards, but this requires further confirmation. But just looking at your question, I see no issue. Jazakallah khairan, Doctor. Okay, then Yasin Shulub asked, is there any, Assalamu alaikum, wa alaikum assalam, are there any calculations of any sort in the CSAA exam? I don't think so. No calculations. Okay, Mubashir, I already responded to you. Dr. Abdul, thank you. Sadaqat, can I have your contact details? Yes, sure. You can contact me in LinkedIn. Just search for Yousuf Sultan. You'll find me, inshallah, and you can contact me there. Any pre-exam seminar? I think this is the pre-exam seminar today. In terms of mock questions, you can reach out to TAIF. Perhaps that could be a different one. Last but not least, there was one question regarding the commodity Murabaha Tawarruq transaction. So in this transaction that you mentioned, Mr. Sadaqat, we find that the commodity is going back to broker A at the end. So in terms of IOFISH standard that we see, it is mentioned that it shouldn't go back to the same seller, right? But practically, as you mentioned, and this is what being practiced in many countries as well, it goes to the original broker. So I believe I saw a lot of discussions being held internally by the Sharia scholars. I'm not here to say which is Sharia compliant and which is not, but according to the IOFI, this is not what was mentioned in the IOFI. So in the IOFI standard, it was mentioned that it shouldn't go to the same seller. Yeah, but yeah, this is practically happening. I completely understand and acknowledge that. Thank you so much. Okay, one question was there in the chat box. Is presence of one BOD member on the SSB enhances the binding force of the of the resolutions of the IFI's SSB? The presence does not necessarily create the binding effect. Perhaps maybe the understanding would be better. The BOD may understand, especially if it's an independent BOD, non-executive BOD member. he may understand and appreciate, and he can easily, I mean, it could be a good avenue for better communication between the BOD and SSB. But if it amounts to non-independence of the Sharia board, then this will be problematic. So we have to be considerate about that as well. Brother Ahsan, I think back to you. There is one hand being raised by a Warshu, Tijani Rabiao. If you want to ask a question, should we allow Brother Ahsan?
Brother Tajani, you can ask. You can unmute yourself and ask the question. Dr. Abu Bakr, you can ask the question. You can unmute yourself.
Dr. Adam.
Dr. Adam.
Assalamu alaikum wa rahmatullah.
Wa alaikum assalam wa rahmatullah.
Please, my question is regarding the model questions. Are they all multiple
I think the sound is not clear.
Okay. Dr. Adam, you can type your question or you can send it to me later. I think he was asking about mock exam or model questions regarding to CSAA. I would say, inshallah, you can contact us and we'll get back to him. Thank you, Mufti Yousuf, for your time and effort that you put in. Like, if you just of this, you are really fulfilling the purpose what you are meant to be as a Sharia advisor, and it's your responsibility that you're fulfilling. We highly regard that, and TAIF is always thankful to you. Thank you for this session. I believe all of the questions have been answered. Sheikh, I'm very grateful to you. Regards and salam from Mr. Zia to you. I just received now. And anybody who would like to contact Mufti Yousuf, he can contact Mufti Yousuf on LinkedIn. All right, it's linkedin.com/in and Yousuf Sultan. You will write it, Yousuf Sultan. Alhamdulillah, he's well known. You can see him and contact him directly. That's all from my side, Sheikh. Before leaving, people who are appearing in the exam, I would want you to make a short dua for them so that we can conclude the session.
Thank you. I think I have one last question from Yasin Shulub. Like, what is the last advice I would give for the CSAA exam? What is your advice? I think the advice would be basically to read the entire Sharia standards at least twice or thrice, and try to understand each and every clause together with the Sharia basis wherever you can. It's actually highly recommended. So even though the Sharia basis is not part of the exam curriculum, so the more you read and try to understand, the more it will be easier, inshallah. So may Allah give success in this dunya and akhirah for all of us, and grant us tawfiq to contribute to the Islamic finance industry, and more importantly, earn halal in our personal life, in our family life, in our social and life. I mean, so let's finish this with Tasbih Kafara and Surah Al-Asr. Subhanallah. Thank you, Taif. Thank you, Brother Ahsan, for your time. And brother, my salam to Brother Zia as well, Brother Fahad as well. And thank you all the attendees for your time. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum. Thank you very much.